Thanks everyone that joined for today's session. So this is a part of our great debate series. And today is always a hot button issue or topic, not an issue, would be around, pricing. So really going to dedicate this session to talking through different philosophies on pricing, certain learnings over the years, and encourage you to kind of share in the chat and Q&A certain questions that you might have that come up if you want to share certain anecdotes from your own experience running your firm. But really excited for the conversation with our panelists today, who I'll introduce here shortly. So I do want to introduce a study. I think Amanda will be able to pop this into the chat, but Ignition, we are a place where you can manage your client engagements and collect payments. And with that, we kind of have some access to some service level data. So what we're able to do this year is actually look at, on average throughout the year, what was the average pricing that was specifically for tax services in the US. So some insights there. We'll share out the full report. I want to go ahead and first introduce our panelists. So maybe we'll just start in the order that I'm seeing on my screen. So we'll go with Clayton, Michelle, Jeremy, and Anne. Just introduce yourselves to the audience, where you're dialing in from today, and a little bit about yourself and your firm, and then we'll move along from there.
All right, I'm Clayton Aiken. I have a firm in Calgary, Alberta, Canada called Aiken Henderson CPAs. And I'm really trying to not be operational much anymore. I'm mostly working on leadership, marketing, a lot of BD stuff. And at our firm, we've got cross-border, Canadian domestic. Our guru product is books to tax from a fixed monthly fee. And we also have one of the top indirect tax people in Canada on our team as well. So we've got quite a wide range of services, and we bill a lot of different ways. So I'm really excited for this discussion.
Hi, everybody. Michelle Vilms. I run an accounting firm here in downtown Boston, Massachusetts. We are 100% QBO, and we're all remote. And I think I'm close to fairly older member of the Ignition crowd, and I adopted them very early. So it'll be fun to hear all the pricing and how it's evolved. I'm really excited for this team of panelists. Jeremy?
I'm Jeremy Wells, an EA and CPA out of St. Augustine, Florida. I run a solo tax and small business advisory firm, and mostly helping small business owners with S corporations.
Hi, everybody. My name's Anne Napolitano. I am based in New York. I have a team of 8. We are all remote and nationwide, and service customers, clients with accounting and CFO advisory services. And we've been using Ignition for probably over 4 years now, and it's really definitely helped our practice.
Awesome. Thanks, everybody. So we'll hear from all of them throughout. So, where we're going to start today, I think often you can see it on online forums or certain webinars of, hey, you should price this way, you should bill that way. Where maybe Clayton, I heard you mention first, having a monthly fixed fee for books to tax. I think maybe just speak to it, kind of where you're at in your evolution and how you're pricing your clients. And then we'll kind of go around the horn and kind of see where everybody's at in terms of maybe how that's changed over the years too.
Sounds good. So first of all, I want to say I've been to a lot of accounting conferences, and I've seen a lot of people up on stage talk about how awesome their firm is and how perfectly everything's going. That's not me. I'm going to get a little more human with you and tell you about a lot of the failures that we've had over the years, which have led us to the learnings where we were kind of at the front end of this with a lot of the people on this panel who have failed over and over and over again figuring this stuff out. So I get that it can be scary. From our perspective, we do have a fixed monthly fee service where we'll include your software and some payroll support and do your bookkeeping and your year ends, and we'll wrap that all into a fixed monthly fee. And we try and do that wherever we can, flat rate things wherever we can. But as I'm sure we'll talk about as we get into the presentation, it takes thinking about your business a little bit differently. And frankly, we still have a core compliance business where we try and flat rate it, but there's a variable component that we include, and we bill most of it at the end of the job. We still do that for a lot of our compliance, for our compliance department. And then we've got an indirect tax person who subcontracts out to other Canadian law firms and accounting firms. And those people almost never want to be on PAD. So our Ignition deployment is very robust in the different ways that we bill. There's really, in where I'm sitting, there's no one right answer. So.
Maybe Jeremy, over to you. I know you're probably the newest firm owner and sense of when you started your practice. So maybe give your point of view of like when you started your practice, maybe what was your philosophy as you're probably the youngest practice here as far as when you started.
Yeah, so I started, let's see, well, late 17 is when I became an EA and started 18. And before that, I had no accounting or really even business experience as a second career for me. And so I didn't come into it with any of the preconceived notions that a lot of firm owners did of how firms should be run, which was based on how the firms they worked for was run or that sort of thing. And I got lucky that in 17, when I was trying to find out about this profession and looking for mentors, that the mentor I ended up working with, he had just come out of a situation where he was working for a firm that was built on the traditional business model and was not happy with it at all. And so he was experimenting with different ways of engaging with his customers, of pricing the relationship and those sorts of things. So from the very beginning, he set me up with a monthly subscription model, and I've used that invariably ever since. And so, the more I've done this, the more I've thought about it, the more I've talked to firm owners who are doing things in other ways, and I always try to come at it with an open mind. I just know for me there's a huge difference between, as a consumer, when I go into a situation where it's clear to me how much I'm paying and what I'm paying for and what I should expect for that, versus the experience where you're sitting in a waiting room for a few minutes, a few hours, and you don't know what that invoice is going to say, you don't know what that bill is going to say, and it's just very different experiences as a consumer. And so I try to keep those sorts of things from my own experiences in mind when I'm dealing with prospective customers and current customers.
And I think sometimes there's going to be some confusion around, subscription. Jeremy, from your point of view, and for those tuning in, can you just explain what it actually means for you to offer a subscription versus, say, a fixed fee or flat fee billing?
Yeah, I think that's a good point. So to me, it fundamentally comes down to, are you as the firm owner, are you selling, right? Are you basing your business model around selling something? And as a consumer, are you buying something that is defined in terms of, there are three ways you can define that. You can either define it in terms of the inputs, right? How much went into creating some sort of result, based on the outputs, right? Some tangible thing that resulted from that engagement, that agreement, that decision to work together, or the entire relationship, right? Everything that's part of that relationship, everything that's relevant to the two sides that are involved in it. We can talk about different pricing and different models and different business models based on those three things, but when you think about subscription, right? When you think about some of the really big popular examples, right? Netflix, for example, you subscribe to Netflix. It doesn't mean that you have a certain limit on the number of movies or the kinds of movies or the kinds of shows you can watch. If it's in their library, you can watch it, right? And that's what you're paying for. You're not paying for the specific movies or shows that you watch. You're paying for access to that entire library. So you can sit there and spend an hour scrolling through to find a 20-minute show that you want to watch, right? But that's up to you as the consumer, the person paying for that subscription, as opposed to, something where, yeah, you might be on a fixed monthly price, but at the end of the month, you're always going to get that same thing. So I think there are a lot of things, even in this economy, that we call subscription, where you're signing up and you're getting something delivered to you once a month. I'm not so sure I fit that into the definition of subscription. I think that's just a fixed payment for a fixed output month after month or week after week or however long. But I think with the subscription, the general idea is you're getting access to the total availability of whatever it is you're subscribed to. Now it's up to you whether you actually use it or not, right? But you've got the access, and that's the key for a subscription to me.
Yeah, thanks for clarifying that.
So,
Maybe over
can
to
I
you,
ask
Michelle. Yeah.
Well, I was just going to ask a question of Jeremy because I love this concept. and I'm not sure that I am adopting it fully. But for the people on the call, is it, when you're thinking about that price, is it you have a core base of the things that you're going to do for people, and you have some room for all the unknowns that come with a subscription, whether they're used or not? And could you maybe help us think about that a little bit?
Yeah, that's I think you're hitting on what is probably the most common objection to adopting a subscription model in a professional services firm, right? And this is a discussion that's happening in accounting firms, in legal firms, in advertising agencies, right? Any of these professional services firms, because we're so trained to as owners, right? And we kind of impart this down through the leadership layers, right? We impart this down onto the managers and onto the seniors, and then eventually down to the staff, of scope creep, right? This is the number one enemy in a professional services firm. We have to limit and control scope creep. Scope creep is loss, right? So how do you combat scope creep when you're on this subscription or even a fixed fee model, and you're worried about just, giving everything away, and you set your business up in a way to where you can't just collect more, you can't just keep racking up the bill if scope gets out of hand? Well, you've got to be very intentional about that. I think the best way to do that, and this is not me. I did not come up with any of this, right? One of the leaders in the profession, especially in the accounting profession, is Ron Baker, and he's talked a lot about this, right? The way you prevent that, you prevent scope creep within the subscription model, is you just be very clear and intentional and precise up front about what actually is included. Again, back to the Netflix model, right? When you subscribe to Netflix, you subscribe to their entire library, right? And to a professional services firm owner, that sounds like, wow, somebody's subscribing to everything I could do. Well, yes and no, because who decides what you can do, right, within that firm? Well, you, right? And so when you subscribe to Netflix's library, you're subscribing to their entire library, but only what's in their library. And they pick and choose what's in that library. If they don't want a movie or a show to be in that library, it's not in there. If you have some sort of service or product or offering or a way of doing things, and you don't want to do it that way, you're the business owner. It's your business. You say, sorry, we don't do that here, or we don't do it that way. It's up to you how you want to handle the fallout from that, right? And that might upset some customers who are used to being able to go to an accounting firm or a legal firm or an advertising agency and just pick off the big menu, right, of the endless options, right? Burger King's have it your way. That's not what we're driving at here. So the more specific and the more intentional you get about, this is what our firm does, if it's within that, here's the subscription fee, right? And that's the idea there.
I think over time you learn by doing this, right, where you go from being transactional and having clients think of you as transactional and switching to more of the, like you said, the subscription model, right? And then it's also learning very carefully about making that engagement letter and that document very, very clear about what you're going to do and the expectations. And you learn, right? You make the mistake where you don't clearly define something in your engagement letter, and all of a sudden the client thinks that they're going to get these types of things and that it's included. And it doesn't take too many times of you doing that before you learn that that's a painful mistake and you need to adjust. And so I've gotten to the point where, I'm very, very mindful of my engagement letters and my scope, and really very, very clearly defining everything in order to make this subscription model work. And it works great, but it requires that thought process.
Yeah, and I agree with you, Anne. I'd like to go back to Clayton and say that to be really great at this, you have to be imperfect. And I think that we're all here and have done some trial and error on some of these things, and moving towards what is a subscription model, which is value pricing and knowing your value and getting away from the hourly billing, because the hourly billing is being diminished, or our value is being diminished by the hourly billing, because the industry is being pushed and pushed and pushed, and we're amongst the best of the best in terms of adopting technology and looking for efficiencies and looking how we're going to change things. And we need to own that and know that that value, it's not a dollar for dollar thing. And so I am in my shop, we do we do bookkeeping, and now we're sparsing it out to explain to people. What I realized was sometimes this power of three and all the different categories, the business owner needs everything. There are certain things that everything has to happen, and who is going to do it? And start talking about it that way instead of saying, Mr. Business Owner, Mrs. Business Owner, like, what would you like to do? What would you like us to do for you? They don't know all the things that they left out. And that is where we're getting crushed because we are not specific. So start out with all these things have to happen. Who's going to do them? And I'll tell you how much it's going to cost you for us to do it. And that's a different way to look at it. So we're not doing hourly. I would say we have a few exceptions, and they are legacy, or there's a specific reason, and there's an intention. But our real intention is to have a price on the work that we're going to do. But make sure they know all the things that need to be done. And I don't think we're doing great customer service on the accounting side to talk about that. All of these things that could come up. Is there someone in your company that's going to do them, or are you going to need us to do them if they come up? And then you lean closer to subscription and what you want to put in them, right?
I want to ask a question, if you don't mind, from the three panelists here about how do you switch an hourly client to a subscription-based client? Like, how do you have that conversation with them and explain the value to them and change it? Because, sometimes that can mean that their bill could go up now because you're not just doing it based on the number of hours you do.
Well, you have to be willing to lose. You have to be willing to lose for the greater good. And I would say this, I think, so I was thinking about like how you change your pricing. And one is it's a direct increase, right? And you're moving away from hourly, and you could add up all the hours you spend, divide by 12 and say that's your number plus 10%. That's probably the wrong way. The other way is to say, we've evaluated how we run our company, and this is how we're going to run going forward. Would you like to come with us? And to say that the anchor was wrong. And that's what I'm finding. And I'd love to hear from you guys. I think the anchor, if your anchor is wrong, that is a harder discussion, and it's really long discussion, because the anchor, they're not like it's 25% more. No, it was always wrong and you got it very inexpensive. I don't know. You guys, Clayton, Jeremy?
I mean, we started our guru practice, our fixed monthly fee with a fixed scope practice on fixed monthly billing. So we didn't really have to transition. We didn't do hourly bookkeeping before that. I've always kind of flat rated our compliance jobs, but we do have a variable component on there. For example, if something pops up, if you did a transaction during the year, which requires a $600 an hour tax expert on it, I haven't included that in our fixed monthly fee, and in our fixed annual fee for compliance. So we put a variable component in there for that. I think I love the idea of just going, you know what, just pay me a fixed amount every month and it covers everything. But the trouble that I have at our firm for that is we've got such a breadth of experience here. It'd be tricky for me to do the math on that, because our GST guy is very expensive to get what we need done there. And, for example, last year, a $60,000 voluntary disclosure popped up in our client list. How would I possibly incorporate that one-time transactional thing into a flat subscription charge and have it be equitable for everybody? I haven't been able to solve that riddle yet, frankly. So yeah, that's where I'm coming from on that.
Yeah,
Yeah,
well, I
because-
mean, to
Go ahead,
answer
Jerry.
Dan's question, like I've never had to do it, right? Yeah, I've never worked with I've never tracked time. I mean, I've only been running my firm for about 6 years, but in that time, I've never tracked time. So I wouldn't know how to do it. What I do know is a couple of firms that I've worked with that have started doing that, and it's just going to be awkward. It's one of those times in life, right, where you just have to say, this is going to be awkward, but we have to do it. And you've got, and that's part of being a business owner, is making those hard calls and saying, look, I know we've been doing things this way, but if you want to keep working together, this is how it's going to be moving forward, right? And so you can either take that approach. Again, a lot of what the way I think about pricing comes from the written words that others have provided to us, and one of the leaders in that field is Ron Baker, and his suggestion is start a whole separate firm, because it's you can spend a lot of time and effort trying to train existing customers and also staff. Don't forget the staff, right? Like they're going to be included in this too, and so it's going to be a heavy lift getting everybody on board with that, to the point at which you might want to just consider starting this as a second firm, right? And he's even given examples where firms have literally opened a space across the street, and with a new brand, with a new business model, take a few staff who are on board from the old office, move them over into the new office, and just start from scratch there. Part of that is you can always retreat back into the old firm if things don't quite work out, or if you don't like the direction that's headed, or it just doesn't work for you. But at the same time, it makes it to where you've actually got skin in the game. You've got a new business that needs to work, and you've got payroll that new firm has to make, and that might just be the incentive to give you to deal with some of these awkward issues of, well, what if this one big transaction that takes us 10 hours of labor to figure out, and we haven't included that in our price? What do we do with these kinds of situations? It forces you to get to deal with those questions, instead of just imagining them and saying, yeah, I don't know, we'll just keep doing things the way we are doing.
So I think I've dealt with that, not in a similar subscription way, but we've got some fixed pricing, and then something unusual comes up, and as a business owner working in the business and doing that, you might not like stop right away. We don't have a separate department doing ignition, statement of work and revisions, and so it gets away from you. And I find in the relationships that you have, you can absolutely say, we both know that this was clearly out of the scope that we both intended. And that, while that is an uncomfortable conversation, we have gotten paid on those by being honest and asking. And so maybe it's not in the subscription model, but you're like, this is highly unusual that you just got acquired and you didn't even know you were selling, or whatever, whatever it might be. But could we both just acknowledge that is worth something else? And we've gotten paid, but you don't get paid unless you ask.
That's the relationship that you develop with your clients, right? And
Right.
that allows you to have those great kind of conversations with them where there's mutual respect for each other, and you understand
and I
that,
think that's
we're all
where we're
working
going,
together.
right?
Yeah.
We're going for, we are your service provider that care about all of your things, and we're gonna shake hands. Like I had an example of there was an unfortunate situation with one of our clients, and I just said, we had to change like banking access and things like that, and I said, you know what, we're gonna talk about this later, we're gonna handle it, and now is not the time to talk about money. Right? If it's like, are you going to charge the extra fee? Like whatever the angst was, it's just not the right. We have a relationship. We're gonna shake hands through the Zoom and say we're gonna deal with it later.
It's really interesting, I think the whole, the original question was about how do we switch? How do we switch our customers, right? And if I come back to that, like we switched everybody onto pre-authorized debit. We have a lot of different ways that we bill, and that's all managed by, we've got a person here who sends out all the engagements. But our clients had a hard time going to PAD, and so, how do you explain that to them, right? Well, my explanation, and so it comes down to creating a benefit for your client. You have to position it in terms of a benefit for, why would I go along with this? I'm talking about PAD right now, but in Jeremy's case, let's talk about a subscription. What are the benefits? In our case, it was, you show me another accounting firm around here that'll tell you exactly what you're going to pay at the end of this thing, and that's your benefit. And in exchange, I don't want to deal with AR anymore. Okay. And, it's those types of give and take conversations where I think a lot of the traditional firms are still, at least up here anyways, are still in a, we're going to have a touch point once every year to review your taxes. And we're not going to really do much more meaningful outside of that. I'm going to tell you that your taxes are right and good luck with your business, and we'll talk in a year. Anything beyond that, which by the way, our customers are craving desperately, they want more of our attention. That's a pretty easy sell to get them onto a fixed monthly routine. So think about your value proposition when you're transitioning people off of the old model and into the new model. Maybe you need to just tweak your value proposition a little bit and make it a value for them. That's all I have to say on that.
Well, and don't you, I often think we've just agreed. We've spent all this time agreeing and writing contracts. Why do I have to send you a bill to wait for you to pay it, hoping you're going to pay me? Like, we already agreed that you would pay me on this day. So, and I say that to my clients who are in
Yeah.
marketing services and other services. We pay people.
Yeah.
People.
We've
So first
lost.
of the month or middle of the month, like, come on, we're
Yeah,
gonna pay
and we've
people.
lost clients over this, Michelle, right? Where
And
we've gone, you
that's
know what?
okay.
You don't want to go on PAD? Happy trails. And they go, what? You're willing to lose me as a client? And I go, yeah, this is better for my business.
Yeah.
Well, I thought you were supposed to be scared of losing clients. Well, guess what? I've lost a ton of business in the last 5 years since I've been doing this, but my business has also quadrupled. So, you know,
Right.
Yeah.
And no one wants to remember to pay you. It's just,
Yeah.
so I'm finding it very relaxed, and people, and then what happens is your clients they appreciate technology. They understand what
Yeah.
you're going to do. And but we're in a people business. We're not in manufacturing. We're 30 to 60 days.
Yeah.
Your bill, like, it's exhausting.
Oh, sorry. Yeah. Thanks
What do
for
you
the
have?
clarification there, Ryan. Pre-authorized debit, ACH.
Yeah.
Yeah, we call it PAD up here in Canada. But you're right. And I think that I bet you 300 people on this webinar, I bet you half of them or more than half of them are scared of change and scared of having those conversations with their clients. And I get it. I was there. We just did it and we lost some clients and off you go, you know.
So I'm going to give you another example, and because it's not from our industry. And I have a client who's in marketing services, and they've been my client for 10 years. And I've been talking about this for 10 years. But one day, every time I would ask him about his type of billing, I would say, but what if you did? And now fast forward. So one example in the marketing industry is the agency pays for the media and then they get paid back. You know what happens? Somebody took your money for 60 to 90 days. So he's like, Michelle, you just don't understand, because that's how it's done. And he's an entrepreneur. I said, but what if you didn't do it that way? He goes, that's a fantastic idea. I don't know. Let them put it on their own credit card. But that's all we're saying to all of us accountants. Be a little entrepreneurial. And what if you did?
Yeah.
And try it with your most trusted clients
Yeah.
to get comfortable and do it.
Or just rip off the Band-Aid and do it. And for a value proposition, statistically
So,
speaking,
okay, I was trying to be
increase
soft.
your, we just whipped off the Band-Aid and did it. And, you know, we managed the communications and we worked on our value adds and all that. Like, we thought through it, but the carnage that we were expecting didn't happen. And statistically speaking, it won't if you just manage it properly. It's just your own fears that you got to get over. And I had to get over. So anyways.
I think we all do, right? To a certain respect.
And how did you do it? How did you jump? Did you jump right in, or did you ease in?
I eased in. And that easing in started when I started using Ignition, because then I started switching everybody at that point to a value proposition and doing that flat fee, and figuring that out. I still have a couple of legacy clients that are still on hourly, and I'll still do hourly occasionally if the project warrants it. You know, if I think it's going to be a cleanup type of project where I really have no idea what the hours would be or what the price should be for something like that, I'll still do hourly, but I take a retainer up front, a large retainer up front, in order to make sure that I don't have any issues with trying to collect the funds at the end, because I've been burned in the past, years ago, where I didn't quite understand that. So, but now I don't run into those issues anymore. And it's been fine, really. I've had no issues with making that transition, but I think it's, we get into our own heads with it, and that people are going to fight us on it, or they're not going to value the relationship that we have. But the majority of the time, it's fine. And then if they leave, it just gives you room for bringing on a new client at a new price point.
Totally.
Yeah, we've got a lot of good questions coming here in the chat, and hopefully we'll be able to get to some of these. One thing I did want to switch to is how you all are thinking about potentially a renewal or an update of scope. You said in your contracts and engagement letters for 1 year, and then how would you go about reviewing that price? And I think we see everywhere, hey, increase your prices. How are you all thinking about when those price increases come into play? Michelle, maybe we'll start with you this time. And
so I think so for those of people on the call who are thinking about adopting some of this, you have to think about, is it a steady state client where you should absolutely ask for an increase based on the economy? absolutely should always ask for an increase. You have to make yourself do it and make sure you have a process in your company. And then there's the change of your strategic vision, right? So those are longer conversations and then you avoid them. So you need to make yourself do it is really what has to happen. You need to plan for it in your firm. But I think clients expect, because if you don't do those increases, let's just take the steady state person. And now you're like, hey, Joe, we haven't had an increase in 3 years. Now the number on your increase seems so big. Maybe it's 25%, but it's your fault because you didn't go 5 by 5 by 5 reasonable. So we need to get in this habit of steady state. That's just what we do. And just say, well, that's just what we do. And what I've done is Clayton, you know, as we've grown, is I'm offloading that to someone else. Now it doesn't even come from me. I'm like, oh, they sent it out. That's just what we do. It's the process. And that's worked. And people are like, that's reasonable. And they don't want to call me because they're like, it was so nominal, but it was fair. But then for these other ones, really think hard. Like, this is your chance to say, let's review what we do. We've redesigned our engagement letter. We want to go through it with you. And it seems that you've been in the wrong category for a long time. And we're doing a lot more for you. And let's talk about what we do. And this is how much it is. So it's uncomfortable, but make yourself do it. I don't know. What do you guys have to say?
We do it annually. I mean, I'm not going to tell you why or what you should do, but we just everything gets renewed annually. If we're too busy to get to a couple and we're not expecting large increase, we'll let them run over. But we just for compliance engagements, we re-engage every year. And for the fixed monthly that we do, we re-engage annually. And that's just what we do. And if nothing else, it forces a conversation for customers that I wouldn't normally have a conversation with. So, yeah.
Have you had any pushback with that? Someone in the chat was saying that their firm is struggling to send annual engagement letters. How do you position that to your client that this is something we're going to review annually?
Just define what struggling means. Struggling, they send them out, or struggling, people are saying, no, we're not going to pay that.
Yeah.
I think they're saying they don't want to do an engagement letter every year. So
yeah. I mean, the only advice that and this is one of those things that I don't even know how to word this. Just do it. And if you need to think about how you're positioning that and what the benefits are to your customer. What's the benefits to re-engaging annually? Well, maybe we're going to have a conversation about your business that we haven't had yet this year. Maybe I'm going to get some line of sight on things that maybe I'm going to get some feedback about our team that I need. And it gives us an opportunity to have a discussion. There's all kinds of reasons why you can think of why you should be doing it more frequently, or not. You know, if you want to just set it and forget it for 5 years, I mean, go for it. I think there's risks there, but I'm not going to tell you what to do. I think just get over your fear and go with it. And if some clients give you pushback, explain to them what the value is to them. And if they still give you pushback, goodbye. You know, this is a very big pie out there. There's a lot of small businesses, I'm assuming everybody's a small business accountant on this call.
So the one pushback I got, and I'll be honest about it, is we put some significant increases in a couple, and they're like, wow, like, do you not want to work with us anymore? And I was like, no, I love you guys. Right. And so my delivery was not done well on a couple, and I have improved, but you need to explain your reasoning, and you need to have those meetings before you present the paper.
So Laura just got back, or someone just got back here and said it was me, and it's more about an issue in the firm and how the mechanics of the old way versus the new way, and getting pushback on that. And so you go, if I was a senior manager reporting to a partner and wanting to engage regularly and the partner isn't, I'd have to turn the partner into my customer now and explain the value of doing it. And if they still won't get behind it, I need to really ask myself if this is the right firm for me. Sorry, but I'm not encouraging you to quit. But how far does that go? How far does that old school thing go when you want something else? There's lots of places out there that'll come along with you, right? So
one of the things
somebody also commented on professional liability insurance. So, you know, check with your standards and your insurance and all that too, right?
one of the things that we found is by making sure that we have ongoing touch points with all of our clients on a regular basis has really helped us make that conversation a lot easier, because then they understand the value that we're bringing to them. They see the value that we're giving to them, and they feel like we have a much better relationship. And it just makes that conversation easier to talk to them, because a lot of clients don't understand what you're doing for them. And I think as an industry, we don't always do a good job about conveying that value. Nobody cares that you do a bank reconciliation, really, your clients don't, but you need to do it, and it does provide some value. But there's those other things then on top of that you bring to your clients, and it's just communicating what you're doing for them.
Yeah. So you've got to do what's right for you and your customers and your business. And part of that is checking in with your insurance provider and attorney. First and foremost, right? You've got to stay in compliance with whatever the rules and regulations and your insurance requirements are. But so I think the concept of the annual engagement letter does not fit with the subscription model. The idea that basically an engagement letter, the term itself, right? You think of an engagement letter, we're engaging to do some work, there's going to be some result that's going to be time bound, and then we're done, right? I think that makes perfect sense for an audit engagement. I think that makes perfect sense for an annual tax return. I think that makes perfect sense for a bookkeeping cleanup. I don't think that makes sense for an ongoing perpetual relationship that we want to continue into the foreseeable future, right? There needs to be a different concept that embodies the terms of that relationship. You get married, you don't go back to the courthouse year after year after year to remind yourself, right? To redo the vows. It's perpetual. It's done, right? Now within the relationship, you have to maintain that, right? You still have to do things, communication, obviously, right? But I think it's a lot more helpful to think about that in terms of a relationship that we want to maintain into perpetuity, as opposed to this structured working relationship that we need to renew year after year after year, or periodically, or however you're going to do that. And so instead, I don't use the term engagement letter. I don't have any sort of time bound. I have a beginning date, right? But there's no end date other than a reference to whenever we want this thing to end, right? Whenever one or the other side or both mutually want this thing to end, it'll end. But other than that, there's no end date to that. There's no renewal date. There's no date where we need to come back and check and make sure everything's still in scope, or that nothing has substantially or materially changed in the relationship, right? Like there's nothing along those sorts of lines. It's just, we want to keep working together. Cool. We're going to keep working together until somebody thinks otherwise and says that to the other side.
It's interesting, Jeremy, because you think of it like a subcontract relationship. Like a marketing person, I might say, okay, I'm going to give you X dollars per month and you just do everything for me. And that's that. And it's easier to wrap your brains around when you're hiring other, it's like, I'm going to go and hire a staff member and they get a fixed amount per month to do, whatever it is that we agree that they need to do. And so you're kind of converting that into a relationship with your accountant, subject to notwithstanding, professional liability and rules around engaging every year for an annual tax return. Fine.
Yeah,
but
of course.
I get it. I get it from that perspective. I totally understand what you're saying, actually.
And I think, again, back to the the Netflix idea, right? Now, when you and by the way, I don't call it an engagement letter, I call it a service agreement, which falls more in line with what, when you think of subscription services, this is what they usually call it, something along those lines, right? It's a service agreement. We're agreeing that you're going to get these services. I'm going to provide these services in perpetuity until we decide that we no longer want to do this, right? And so that there's that aspect of it. And if you think about it, it's not permanent. I try to think about the way I say this very intentionally, because it's easy in these sorts of conversations to get loose with our language, and that can cause some pretty big misconceptions, because we have a way in the end, in the profession of doing things. But I keep saying in perpetuity because to me that's different from permanently, right? The person you got the person you got married to, right, on the day of the ceremony, that's going to be a different person 10 years from now if you're still married together, 20 years from now, 30 years from now, because life happens. People do change, right? So we've got to think about this relationship changing over time, and we want to allow for that. So what do the big subscription companies like Netflix do? Well, every so often you get an email and say, hey, we've updated our terms of service, right? And here they are. They communicate that to you. Every now and then you get an email that says, hey, in a couple months we're increasing your price each month, right? And at each one of these points, right, it's not a dramatic material change to the relationship. All it is saying, look, the world's changed a little bit. We need to update things a bit. And it can be that simple. It's just a matter of communicating that, being clear on that, and the whole time knowing that either side can say, yeah, this doesn't work for us anymore, right? And that's the key to it.
On the topic of surcharging, I'm curious, this is new functionality in Ignition. Does anyone feel strongly about surcharging fees, or what is your policy on, you paying payment processing fees?
It seems like it's become a lot more acceptable these days because more and more businesses are passing those fees along. My thought has been not to pass those fees along so far, and I'm still on that. I'm still going with that for the time being. I include that in my cost of doing business.
I agree with Anne. I just think that for any of my clients, I would coach them like, it's not a good idea. It's just part of doing business. And my thought as we were talking on the webinar is that because you're doing hourly and you haven't figured it into your pricing, and now you've worked hourly and you're getting paid less. So I just think it's a wrong road to go down. You're doing, your intent of using merchant services. And my intent is that people want to get their points and I want to get paid faster. So work it into your pricing, and don't go down the bandwagon of adding it in. And
just one thing, we did launch a poll here. I know some folks wanted to make sure they got the polls in, so there's a poll live here. If you missed one, sorry to interrupt you, Michelle, there. Anyone else have any thoughts on that?
But someone may know, I think that in some states you're not allowed to add a service charge. And I'm not an expert on that part, but I've had
In New York, you have to provide a cash discount. You cannot add a surcharge. So you have to provide clear pricing on what it is with the credit card fee and then offer a cash discount. It just has to be worded a certain way. It's very odd. So
yeah, so I think it's cautionary. But what do you guys think?
I'll be the contrarian here.
Okay, good.
I'm definitely charging it. We turned off credit card fees and we just do PAD now on most of our engagements. And now that Ryan has said that this new feature is going to be live, we'll start offering it to people. I think that, Guy actually said this when we were in Chicago, how it's crazy that there's this expectation that using your credit card is going to get you all these free things. And that expectation really only exists in North America. And it's like, travel this and bonus that. And it's like, who pays for that? Small business owners. I'm a small business owner. Why do I have to eat up 3% of my margin for you? Like so I'm good with charging it back, and I'll have an honest discussion about why I'm doing it. You don't just get those points. It's not the credit card company that's giving you those points. It's my margin that's giving you those points. And if we want to talk about what things actually cost and have a realistic discussion about the inputs that go into making your travel plans better, it's coming off my back. So anyways, and in Canada, by the way, it's legal now, so we're good. We just got that like last year or something. It's new. So
I love that about you.
That's not my legal advice, by the way.
That's why you're here. That's great. We'll give it some thought. Jeremy?
This is one of the few things where I am really struggling to come up with a coherent position for myself on this. And I have at times, and that's lasted for maybe 5 minutes until I think about one of the counter arguments, right, to either side, because I really do get both sides. I don't use credit cards. In my family, we don't. There are a couple of very small things that for the business, I keep a credit card account open just because there are some kinds of transactions like airplane tickets and renting a car where a lot just won't take a debit card, right? Or there's some issues there. But for the most part, I stay away from credit. Part of that is because if it's an entire industry that's built on using cool, popular people trying to sell you these little pieces of plastic, then there's probably something up, right? Like there's probably something going on with it. And yes, I totally agree with what's been said so far that no, these rewards, points, miles, cash back, whatever they're throwing at you is not free, right? It's getting paid for somehow, and so on that hand, right on that side of things, I'm all for to pass on those charges, right? Like upcharge it, however you want to do it, increase your price. I personally think, and this goes back to one of the things I said at the very beginning, trying to think about this from the consumer's perspective. Nobody likes to see itemized charges because it just nickels and dimes everything. You can pay the exact same amount, but when you see everything listed out, right? I mean, think about the last time you went out to eat, right? And when you could just order the meal and there was one price for it, versus when you see, well, here's how much the sandwich cost, here's how much the chips cost, here's how much the drink cost, and then you say, wait, I paid $3.75 for the drink. That's not okay, right? As opposed to the whole bill was $14 and you were fine paying $14 for lunch, right? But you're mad about the $3.75 for the drink. And I feel the same way about the any kind of surcharge. Now, that being said, I got no problem with you and your business, right, saying this is what we've got to do, and our customers are fine with it. They keep paying. I got no problem with that. And I've been on the receiving end of paying what I think are some exorbitant merchant fees so that my customers can enjoy their free rewards from the Amex cards and the Discover cards and whatever that they're using to pay me. So I go back and forth on this. And I really think you got to do whatever you think works best for your business and your customers.
And now let's kind of go to our takeaways. Maybe I'll start with Clayton. Talked about a lot on this session. What would be your recommendation to folks that are maybe thinking about making some change going into next year?
I would say there's no one right answer. The thing I love about Ignition is through our various divisions and we have 3 completely unique client sets here that want to be charged different ways. We have all those options in Ignition. So don't be overwhelmed by people who tell you must charge fixed free value pricing or else you're in the past. Like, that's not true at all. I think you got to really analyze what you want to do and apply it. I encourage you to get on PAD though on 100% if possible, or ACH, sorry, so for confusing everyone. That'd be my advice, is just don't agonize too much about going fixed monthly when that's what the whole industry is telling you to do. You don't necessarily have to go there. Just that's it.
Anne, what are your thoughts or takeaways for folks?
Don't be afraid to make these changes. Go for it. I think you'll be pleasantly surprised with the response from your clients and the benefit that you'll see to your own business. So be fearless.
Great.
Michelle?
So I think I'm just going to say, we put a lot of analytics into these things. Oh, there's a poll. If somebody needs to know, there's a poll. We put a lot of analytics, and value is an intangible. And so if you're just getting started in this, I'm going to say the shortest answer is like, list all your clients out, group them together, figure out the services that you do, and do your homework. And if you really want to try it, you actually already know the answer. You're a little afraid of it, but you know the answer. So give it a go and hold back on some of your legacy clients, and that's okay too. Do the hourly that way. So it's an evolution. Keep talking to us and people in the industry as we push forward, because it's a great idea and everyone's going to adopt it differently.
Talk to your customers, right? And ask them about how they like doing business, not with you, but with everybody else. Make this part of a natural conversation with them, right? I mean, especially if you're doing the bookkeeping for them, you see all their vendors right there, right? Look at the ones that they're spending the most money with and just ask them, how's that relationship going, right? What do you like about that relationship? What do you not like about that relationship? And they will tell you if they think you're just talking about other vendors, right? But use that information. This is something in both business to business and business to consumer. Variability in pricing models is becoming more and more common, right? You can subscribe to your air conditioning company, right? So that they will come out twice a year and repair your AC, and you're just on subscription for that, and it'll get you prioritized, if something does break, right? So, there's variability in the way you can do these things, and find out from them, just casually, naturally, what do they like? What do they not like about that? And keep records of those conversations, and start looking at patterns, and start including those patterns not only in your own business model, but in the way you're advising your customers. Hey, we've got more and more customers that are experimenting with this way of doing things in their businesses. You want to see if it'll work for you too, right? You will become not only just a source of being, not only just a better vendor to them, right? But you will become a source of better advice to them on how to run their business. But get there by talking to them, by having conversations with them, by asking them questions.
I think that's good.
Love that advice to end us there, Jeremy. Thank you, Jeremy, Clayton, Michelle, and Ann for joining for today's webinar. I did put some links in the chat there. If anyone's heading to QB Connect, we hope to connect with some of you in person there. I put a link to an event we're hosting, so we'd love to see you there. If anyone's interested in a free trial with Ignition, you've got that as well there too. Encourage you to follow up with our panelists if you have any other questions. They're all super willing to help and give a lot back to the profession. So we thank them all for joining us today and taking the time out of their day.